Aloha traders, reading Glenn here from Hawaii Trading Academy. Thanks for tuning in. In this episode, we dive into inflation, how that's affecting Glenn and I's trading strategies, how we look at inflation, and just some concerns on how inflation, what it really is, and how to work around it. So, hope you guys enjoy.
Welcome to the Edge Up Podcast with your hosts, Reed and Glenn from Hawaii Trading Academy.
What are your opinions on inflation when someone talks to you like, oh my goodness, eggs used to be this, now it's this. Glenn, do you see this in your trading? Is inflation affecting trading any way, form, or fashion?
No, absolutely not. I mean, in a way, yeah. Like if you have like trading subscriptions, you have tools, you have tech equipment, those will all generally go up in costs. But at the same time, when you're actually trading, that doesn't have barely any influence in your day-to-day operation or your trading plan, So
Yeah, I
yeah.
don't think it has any implication on the charts. The charts won't show, oh, inflation. If anything, I guess the way inflation affects the market is maybe fundamentally on how when say Biden announces the State of the Union and inflation's at this whatever, or the Fed rate or whatever, they say inflation is this, so we're gonna do this. That's affecting the market. But I think in overall, like it's tradable. It is
It's
tradable.
tradable.
Inflation is tradable.
But like for example,
The
right?
fundamental
Let's say
aspect.
we're trading during that speech. Yeah. And that one sentence. That one sentence can be significant enough to put a blip on the market. You'll have long wicks. And then the market will go back to doing its thing.
It'll go back to normal. Yeah.
Yeah. So, bro, according to the latest report, the inflation rate for the United States at the latest is 6.4%. Now, last year we peaked at about 9% at 1 month. Now it's down to 6.4. You're hearing all these things. People are saying eggs are going out of control, their prices, people are gouging this and that. You know, there's a lot going on in the news. They're continuing to amplify this concern of inflation, bro. But you and I, we're traders, right? And yes, we can't say that inflation does not influence the market at all. It does in its own way. But at the end of the day, like when it comes to you loading up your charts, Read, like, do you see much difference in your decision making, your preparation, when starting to look at the markets?
The way I see inflation, I see it as a fundamental aspect because it's it has to do with the numbers and statistics, and usually that affects the charts in some way, form, or fashion. So being a forex trader, I think Euro USD would be the most affected, or pound USD. I think inflation numbers coming out would affect it, but not the long term, oh, eggs are expensive this month, or eggs are expensive for the last 3 months. Inflation is here. I think the way to look at it is the long term, how has inflation affected our past, and how does inflation look like today? And that's easily discernible through the charts and data and statistics. That's how I'm seeing inflation. I'm not worried about it. It's just, to me, it's just another fundamental announcement, because that's usually when I hear about inflation is through news announcements.
Right, right. And going back to like before we just continue on and dive in, going back to the very basics, economics 101. What is inflation? Some people may ask. They hear the word day by day. Some people don't even take the time to um what do you call it? Look into it. And so let me just pull up the definition real quick. Inflation rate definition. So it's generally the rate of increase in prices over a given time. So, for example, now it can go get more complex. I've heard like Warren Buffett say that not only a small amount of people truly understand inflation. All right, to be like
Yeah,
a total
it's
expert.
confusing.
Yeah,
It's a little confusing, for real.
there's a lot to it, but just the general for those out there listening in, it's just the general amount of percentage that price has rises. For example, eggs, right? Right now, eggs are 6.4% uh, more expensive than it was the previous year. Okay, so and going back to it, so that's just a general consensus. Now this can bleed go on to our car payments, our manufacturing, the our businesses or the services that we go through as consumers, all these different things, they start to add up. And so, another way I've heard it put with inflation, how to understand it, it's like, okay, in order for you to beat inflation this year, you need to you need to figure out how to make 6.4% more money throughout the year in order for you to be even with inflation, or have the same buying power. Where then, the old Glenn was like, "Oh, dude, my boss doesn't give me a 6% raise. My job, you know." So like at the end of the day, if you're in that situation, just understand, like, look, you're getting hit with inflation, and then you're getting hit with Uncle Sam. He's still taxing you after that, right? So take those costs. It's good to have a understanding and not be in the dark with your finances and the way that the economy works, and start to question, like, well, okay, I'm working my job, and then I'm figuring out, like, okay, I'm coming up a little bit short nowadays. How come I can't put away as much money? Is because it costs 6.4% more to do your day to live your daily lifestyle. So bringing it back to trading, bro, Reed and I, we've done um some research for you guys, and
Wait, can I say something real
yeah,
quick?
yeah, go for it.
Uh, Coming back to the 6.4% in inflation, from my understanding, that's the average of all the sectors. So there's like the groceries sector, there is cattle industry, there's gold, there's like, commodities. Everything there has an inflation. So I saw actually construction went up like 13% or something, like cost of goods and all that. So that 6.4 is just the average of all the markets together. And I think at least that's from my understanding. But yeah, so just so like know that like you don't have to actually, because I was thinking about like, yeah, we got to make more now. We got to make 6.4, but it's actually, I just had this thought now is that you don't need to make it in all sectors, because some is, like I said, 13%,
Mhm.
others only 2% or 1%. And so, I mean, it's dependent, right? But I think that's a good target. Is like you said, a target like, okay, I need to find an income source or make 6.4. If I'm averaging 10%, I need to make I need to make 16.4% by this year. You know what I mean? So I think
Right.
that's a good goal to set. But
Yeah,
yeah, we could, yeah,
it's a good
that's
understanding.
all I got, man.
There's
Yeah.
a lot of good visuals out there, like what Reed was saying, all the different sectors. There are sectors that barely had any increase at all. I think, for example, TVs, they've been very much more affordable, or eat lots of supply out there, so therefore prices haven't moved much. If I think it might be even getting cheaper, you know.
Huh.
The other last year, lumber was going crazy, wood construction, like we was saying. So, how do you take all this information out there? Yes, there's a lot. There's all these sectors, um, and we don't expect any of you guys out there to be like experts in all of this and be a economic professor and have all this data. You know, when really we have to look out and filter out which pieces of information we can use to help our trading for the better, you know. And so we kind of helped out, we kind of put together some things for you guys. So we wanted to identify, you know, contributing factors on what a low inflation environment looks like. Okay. We can't say we're in a low environment right now. A few years ago, we were, I think back in what, 2015, it was very
Yeah.
low,
Yeah. Yeah.
right? Now it's crept up. Okay. Back in the 80s, according to our research, back in the 80s, it was high. It was about 13% inflation, 14%. And so now we're kind of in the middle, guys. We're in the middle on our timeline right now. 2023, uh, we are creeping into March, or we are at March, and it's at 6.4%. So we're kind of in the middle. Now we want to identify, okay, what kind of factors that a low inflation environment has, right? And we'll dive into this, and you'll understand why we chose this, right? This particular data. So the first contributing factor is a strong US dollar. Now, last year, you saw back in 2022, the US dollar was kicking butt. It was going strong, man, all against the other pairs. Um, big, big run for the USD yen pair. If you guys haven't followed that one, the US dollar went up, and I think we've got into like 150 yen. I don't know what exactly per dollar, you know. So it hit new high for the past recent years. So that's something to look at, guys. That's definitely an opportunity. That's good for the economy, of course, right? Because our dollar goes longer in other countries, you know, and it's the leading currency. So it's a good thing. It's a good thing. All right. So number two, another thing factor to look out when we have low inflation environment is businesses and services have low demand. So that means pricing for those products shouldn't be too high because we have more supply than demand, you know, really just keeping it simple. Um, high supply equals, or high supply, low demand equals lower prices. We have low supply, high demand, higher prices. For example, back in 2020, COVID breaks out. You can't buy masks anywhere. Demand is just skyrocketed overnight, essentially. People were charging crazy amounts for masks, and then people start getting creative, going to the fabric store and making their own. This happened, guys. This happened 3 years ago. All right. Um, so that has happened, right? And we're in a wacko year. 2020 was a wacko year because we're coming off a low inflation. It's starting to creep up. And then, you know, we still had a strong dollar to a certain sense, but now we didn't have low demand. Certain sectors had crazy demand, other sectors like the travel industry, very low demand. So we were just hitting the extremes on both ends, you know. And so, you know, I'm building it up to where we're getting to now. And the third um contributing factor for a low inflation period would be stable commodity prices. So energy, oil, gold, metals, corn, wheat, all those commodities, gas, natural gas, those guys have should be stable during a low inflation environment, meaning, you know, we're not running out of oil as a country, right? We're not tapping into our reserves. We got a good amount coming in. We have a good amount getting out because the country still needs it to run, you know. And so everything is all
Right.
good. But back in these past few recent years, if you keep up with the
Hello?
oil market, guys, I think back in 2020, it dumped. It went to negative for as far as a barrel of oil. But now we've crept up after that dip, and we're trading at a more amount per barrel per contract that we've normally seen. So, for example, lumber as well. That thing skyrocketed during COVID because there was a big need. People wanted it, right? They still were doing construction. Um, the commodities such as corn and wheat was going up. Natural gas had a crazy run. Now these guys, like if you ever trade these markets, guys, I know a lot of trend followers do. They've had some killer trades. Okay, there's reasons why we're bringing these different factors up because these are all opportunities, guys. They're all opportunities. So whenever we hear the word inflation, we hear it from the news. And what's the news number one business, Reed? What's the number one business?
Fear is the number one business. That's fear mongering. And how that relates to trading is like, it'll keep people from investing. It'll keep people from trading just because they're fearful of what people see in the news, and what the news is pushing. But like you said, so I actually had a question for stable commodity prices. You were talking about like the bullish runs and all that. Is that stable, or is like stable being traded in a zone, or like what would you like? How does that look like on the charts as a trader?
No, that's a great question. Stable would equal to me what the way I understand it, stable would be like ranging markets. We're in a big range
Tradable. It's
and
tradable.
it's just going back and forth and it's in a median price.
Okay.
Now, the past so I'm looking at a chart so you guys can pull this up on your own. The Let me just pull it up right now. Oh shoot, almost ended it. Okay. So I got this chart of corn and this is a weekly chart. So as I was mentioning in 2015, we've had low inflation. And if you see this chart, we got these big spikes on the left side of the chart and big spikes on the right side of the chart. From 2015 all the way to about 2020, that's where we would see this stable somewhat price of corn corn futures. It will just trade in this range, and it started picking up. We got a breakout on September of 2020, and it was trading about 391 per contract for the price of corn. We took a run all the way to the high of 820, 822. Now that is almost a double, or yeah, what is that? 300. Yeah, that's almost a double in increase in price, guys. Big movements. Now, yes, it's a good time to trade because there's opportunity, there's volatility, there's volume. People are looking at this market too. So going back to your question, yeah, like a stable commodity price would pretty much equal ranging or consolidating, where the market's essentially going nowhere, not really trending in a big sense.
I gotcha. That makes sense. Yeah, that was very clear explanation for it.
Yeah, yeah. So at the end of the day, guys, like, when you hear the word inflation, um, there's a few things you gotta really ask yourself, right? Like you hear the word inflation every day in the news, bro. Like, does that
Yeah.
have an influence in your trading or the way you look at the markets?
Negative. It has zero way that I look at the markets. Doesn't affect me. Uh, like I said, the only way that it would affect me is if there's an announcement that comes in with the exact number from President Biden or like someone important, like the Fed chair. If that comes in and they announce it and it affects the charts in that way, then awesome. But like you mentioned earlier, Glenn, it's opportunity. It's more opportunity. Once the price is filled in, then you're able to trade it. And I mean, like it's just to me, it's just volatility. So it's like, no, I don't. I get excited. I'm like, yes, let the news amp up that fear because I'm going to capitalize on it. So there you go. That's a simple answer right there. How about you, man? How do you look at and hear about when you hear inflation? What's going on in Glenn's mind?
Yeah, it's a good thing to really understand. If it wasn't for trading, I still wouldn't have. I never would have understand the term inflation and what it does. You know, being a business owner myself too, right? Like we're seeing the cost on both ends as a consumer and as a service provider. You know, so um, it has a new meaning to me. And when it comes back to the trading, um, yeah, like as traders, we have to be our own filters for these terms, these noise, these news. You can't really change up your trading approach or strategy based on this word, you know, based on the inflation rate. Like you just got to go in and perform, guys, you know, like um
It, to me,
we
inflation. Yeah, inflation. Sorry to interrupt, man, but like you just had me going on a thought process. Like inflation is this. It's external. It's like it's this big cloud that you can't control, but you could only put your umbrella up and like experience it, right? You have to take it all in. And I think that's the thing is like we could control ourselves in trading, but we can't control inflation. So like like just be at peace about that and just trade on the next opportunity, the next good trade.
yeah, yeah.
Sorry to
Like
interrupt, man. I
oh
got excited.
good, good. We we can't fix inflation. Not no one single person can fix inflation. Even if the US as a whole country, you know, were to tackle like put all our resources and energy into inflate battling inflation, you know, yes, there would probably be some differences, but like you still we're on a global stage, guys. The market is global, you know. So what do you have control of, right? Going back to it, we got a control of our trading approach, our edge. Maybe during these big announcements, maybe our edge results get skewed. Maybe it gets less. Maybe there's more. Our risk management, right? That should be even more amplified and our focus when we're trading during these inflationary periods. And three, your psychology. The psychology is key, guys, right? How do you react to it? What are you going to do about it? Cost of living is going up. Yes, it is indeed. Are we just going to bitch and moan about it and complain to our neighbors? Or are you going to get into action and turn off Netflix and, you know, do something about it, right? For your livelihood, for your family. What are you guys going to do? You know, we want to bring up that question that people you might not hear from your loved ones like, okay, inflation is happening, but let's just try to do what we can, right? So at the end of the day, as a trader, you have control of the things you have control of. You can't tell inflation to go back down. Rather, utilize it and figure out how to capitalize on it.
Yeah, I want to end it with it. That was great, man. Always love doing podcasts with you. I'm going to end it with a question for our audience. What are you thinking about inflation? What are your initial thoughts about inflation? Are you worried about inflation? Is it going to affect you in any way with your trading? Or is inflation too big to handle? Like, how are you handling inflation? So, thanks for listening, guys. It was a pleasure doing this with you, Glenn. But we'll see you in the next episode.
you guys have any more questions, find us on hawaiitrainingacademy.com. Also follow us on all the social media channels. We'll see you around. Whether you're looking to improve your trading mindset and growth, we'll provide you with the tools, tips, and inspiration you need to make your next breakthrough. So tune in and let's edge up together.